Over 90% of financial professionals cannot beat the market. So why do we think we can? As a qualified accountant with almost a decade worth of experience in the finance industry, I've realised one thing: it's almost impossible to beat the market. In today's video, I'm going to run through why I personally stopped investing in individual stocks and why it most likely will make me more money in the long term. Just a short disclaimer, this is for educational purposes only. I'm an accountant, not a financial advisor, so please do your own research before deciding to invest in anything. Let's start with my Trading 212 account. Right now, it's valued at just over 24k. Here's where it gets interesting. Let's look at my biggest stock, which is IAG. It's valued at 22k and it's earned me over 7k in interest. However, if we look at the worst stock I've ever purchased, which is Virgin Galactic, about 5 years ago, it has lost almost 99% of its value. So did I just get lucky? Well, not exactly. I only invested £100 in my worst performing stock, whereas I invested over 15k in IAG. So why is there a difference? So this was during COVID when airlines couldn't fly. Therefore, airline stocks dropped massively, and I saw this as a massive discount. Now, hopefully, we don't have another global pandemic anytime soon. But that's exactly why I think picking stocks is no longer a good strategy for me. As you can see, the stocks I picked before COVID and after COVID haven't performed nearly as well. So, why is beating the market so difficult? Because the market is efficient. It reflects the collective knowledge of millions of investors, institutions, and algorithms. Every bit of news, interest rate, earnings report, political event gets priced in almost instantly. By the time you've read the headlines, it's already been reflected in the share price. That's why studies consistently show that 90% of managed funds underperform simple index funds after fees. If full-time professionals with research teams and billions in resources can't consistently beat the market, then as individuals with limited time and resources, the odds are stacked heavily against us. My current plan now is to keep IAG for a few more years, but any new investments is going to go into a low-cost index fund. If you want, let me know in the comments if you'd like me to break down my Vanguard Stocks and Shares ISA to show you what I've been investing in for the last 8 years. I honestly believe, unless there's a massive event like a global pandemic, or you get extremely lucky, you're not going to be able to beat the market consistently. So for me, I'm removing the guesswork and sticking to the safer, more profitable option for the long term. So let's look at the data. But please, do your own research. I'm not a financial advisor and your capital is at risk. The S&P 500, which is the 500 largest companies in the US, has returned on average 11% per year for the last 20 years. That's through war, recession, high inflation, and pandemics. If you invested 10k into the S&P 500 in 1980, today you'd have over £900,000 in that account. Compare that to individual stock picking. Studies consistently show that majority of individual stocks actually underperform the market, with majority of long-term returns coming from a tiny percentage of companies. So unless you pick those winners early and hold them through the dip, you're probably going to do worse than a simple index fund. That's why even Warren Buffett says to just pick an index fund. If the world's greatest stock picker says it, that's good enough for me. And here's something I haven't heard most people talk about, and that's the time, stress, and cost of picking individual stocks. When I was picking individual stocks, I used to spend hours each week researching companies, reading reports, keeping up with the news, and even then, I still wasn't 100% sure on my decision. Now I spend probably 3 hours per year reviewing my portfolio. The main thing I do is I check fees haven't changed, make sure everything aligns with my goals, and then I just leave it alone. For me, it's much lower stress. I feel like I'm going to make fewer mistakes, and in the long run, I actually think it's going to make me more money. That's why I stopped stock picking. It's not all about the returns. It's about building wealth without the constant drain of trying to outsmart the market. And there we go. If you've ever tried to pick your own stock, I would love to hear your experience. Drop it down in the comments below. And if you want more practical long-term advice from two qualified accountants, make sure to subscribe. Thank you all for watching. I'll see you in the next one.